Well, let's delve into the local market now. Byron Lotter, Portfolio Manager at Vestact, joining me at the desk. Byron, thanks so much for joining me. So let's talk about the resource space right now. I mean, we've started to have mining companies reporting globally and, of course, locally. What are your thoughts as it stands when it comes to a rebound in the overall sector this year?
I think overall sector, we're still going to see some positive demand coming through. Obviously, we're seeing China with good growth numbers, good export numbers. And of course, when you have a look at a company like Kumba's financials, you can see that the majority of their exports go to China. So
90% of their of iron ore is exported, and a majority of that to China.
Yeah, I think it's 67% to China, and then the other 23% is to Southeast Asia, the rest of Asia. So it's all going to Asia. So when people drone on about China, it really is because they are the biggest demanders at this stage. And seeing that there is not going to be a hard landing there, and the demand's still going to come through, and we're going to see a big consumer demand coming through from that side, I'm still very positive. Mm-hmm. Locally, that's all on the production side now. When you look at the local stuff, obviously we're going to delve into Goldfields and Impala now. You can see that these companies really are struggling with regards to labor issues and electricity costs and so on. So it's a hard industry to be in locally.
Yeah. Well, as we were saying, I mean, Impala Platinum's first half HEPS tumbling 78% to 128 cents. It was all around the strike action which disrupted production. Now, Impala CEO Terence Goodlace had this to say about those numbers.
It's a very challenging time. There's a huge amount of stakeholder expectation. As you said, in terms of demands coming at us left, right and centre. At the same time, we're not getting the productivity levels that would offset some of these cost increases.
Certainly seems like a downbeat CEO there. The stock's down 3% today, 160 Rand. Has too much bad news being priced in? I mean, the platinum price is stronger and it continues to rally.
Yeah, interestingly, there's that impairment that they talk about, and I only managed to find one line describing what it was about. It was 660 million Rand, and it had something to do with a client in the toll recycling business that they had to write down a receivable. So I was a bit disappointed that they didn't explain that properly, because that's a lot of money to deal with. But of course, definitely. Terence Goodlace came from Metrex, and he turned that business around, and definitely knew what he was taking on when he came to Impala. And Impala were one of the first ones to face the big strikes and managed to sort things out a lot better than what Lonmin did. But of course now all these mining companies are trying to change the way they treat their employees and how they, in terms of the working conditions and so on. So we're going to have to see how that is going forward. But when you have a look at the actual costs of production, the increase is monumental. I think it's something like 15,000 Rand an ounce now, coming up from 11,000. And that's also because production has dropped by 25%. So obviously,
so units coming down, obviously that also affects
it's going to increase
cost
price. Exactly. So there's a lot of issues, and the same issues are facing the gold miners.
So same issues facing Goldfields right now. What are your thoughts on the numbers that we saw there? Because the stock also slipping back on the day, and we know there were strikes at KDC. We know there were strikes at Beatrix. But what happens if things turn around this year? What happens? Do you think that it's too soon to call that?
Well, it's hard to understand the gold price. We always say this. I don't like to invest in something that's price is mostly based on speculation. I prefer to understand the fundamentals, where the demand's coming from. So that would keep me away from gold in the first place. And then to have the issues that the gold miners are facing. We often say, if you have a look at the price of the gold miners compared to the South African gold price, the South African gold price comfortably outperforms as production has decreased. So either way, it's something I'd stay far away from.
Even a Pan-African Resources, because I was speaking to them yesterday, I mean, they make fantastic margins, but a very small player.
But, if you struggle to predict the gold price, as an investor, you want to understand, where that price is going, because essentially that's where the profits are going to come from. Then, again, I'd immediately stay. I know that the fundamentals behind that company look very exciting, and they're making lots of money, and they're one of the only gold miners that have a great dividend yield. But why is that? why are the only ones with a good dividend yield? It's because it's really difficult to mine in South Africa at the moment. The mines are getting deeper, more dangerous, and of course the labour issues.
Well, let's move on to the retail space. And we said earlier, Woolworths reporting a 21% increase in first half HEPS. That's to 164.2 cents. Now, the South African food and clothing retailer declaring a cash dividend of 86 cents. Earlier, I spoke to CEO Ian Moore about their strategy going forward.
We've moved away from a franchise model. So we've moved away from a franchise model in South Africa and are in the process of moving away from a franchise model in Africa. Our preference is to run the businesses corporately, and where we can't, we'll run them as joint ventures where we have majority control. And we're continuing that drive through Africa. But we see Africa as an important market. It's small just now, but it will be big in time. And what we've got to do is make sure that we're committed to that growth, we apply the resources to that growth, and we make sure we get the profile of the stores right, we allocate the right stock to those stores, and we flow the stock efficiently and well, and we get our prices down in those markets. If we can do that, Africa will become a much bigger business for us. So take Nigeria. The biggest issue we've got is how long it takes us to get goods from Cape Town into Nigeria. It's a difficult market to get into, so it takes a long time. It takes a long time to get through customs. It's difficult to understand because it's a new market for us, and it's a market that's only just becoming formalized. So until recently, it only had one shopping mall. So it's going to take time. It's going to take time for us to understand. It's going to take time for our systems to be able to flow goods efficiently and cost effectively into that marketplace.
Okay, so yes, the stock is down 2.6% today, but that's off a 60% one-year return, and I don't even know what the 5-year return is. What do you do with your Woolworths stock right now?
Well, we still like it. When you have a look at the financials, you can see exactly why they're really pushing into the clothing. When you compare it margin-wise to the food business, it comfortably beats, and it's a lot easier to sell clothes, especially if you want to take the business up into Africa. Of course, with the food, you need it to be fresh, and the transport's very difficult, and finding the right produce is hard. So they're pushing that clothing business, and they've managed to get that extremely right over the last 3-4 years. I mean, 5-6 years ago, no one really spoke about Woolworths as a clothing retailer, and then Ian Moore came in from a clothing retail background and really changed that around. So that's great to see. And then, of course, it falls very much in that aspirational consumer theme. People strive to shop there. It's definitely at the top end of the grocery market, and definitely you feel like you're getting your value for money.
Well, that's of course your point there, but let's talk about stocks that you're falling in love with, falling out of love with. It's Valentine's Day. Let's have a bit of fun. Talk to us about Discovery.
Well, I'm going to refer to these stocks as she now. So Discovery is one that I'd be falling in love with because she's got a very sexy business model, and she's a bit of a globetrotter. She also likes to look after herself and keep healthy, and definitely exciting prospects there, stealing market share. So that's why I choose.
And the
Discovery.
stock you love to hate?
British American Tobacco. She smokes.
Not a fan of that.
She's overweight. No, not a fan of that. She probably drinks a lot as well.
But she's done very well. So.
But she has done very well. That's why I love to hate her. So she often slaps me in the face there.
And the one that you will stay in a long-term relationship with forever and ever?
I've chosen Richmond because she's elegant. She's trustworthy. She also owns the jewelry already, so I don't have to buy it for her. And again, she's a bit of a globetrotter. And she's conservative.
Okay, well, on that note, there we go. We'll check in with you and see how these lovers have done in a year's time. Thanks so much for joining us, Byron Lotter, Portfolio Manager at Vestact.